This lecture covers Chapter 12, Effective Budgeting in the Laboratory, Practical Tips. Following successful completion of this chapter, the learner will be able to describe the operating budget types, explain the steps for preparation of a successful budget process, identify common budgetary problems and recommend possible solutions. Describe how to write proper budget justifications. Seeking to radically change the current healthcare system, in March 2010, President Barack Obama signed into law a healthcare reform bill known as the American Affordable Care Act that looks to rein in costs and provide coverage to most Americans. However, many other conditions have been added to tag along with this bill, and there are no plans for how the U.S. taxpayers will pay for this bill. In addition, the Centers for Medicare and Medicaid Services has developed pay for performance initiatives to encourage high-quality care to be delivered to Medicare beneficiaries. There will be fewer reimbursement dollars to provide health care to more Americans. Effective budgeting. Within reason, the laboratory manager must be able to accurately forecast expenses for anticipated patient and test volumes and, to lesser extent, revenues. The budget is a forecast, a best guess estimate of anticipated volumes, revenues, and expenses. Most test volumes, revenues, and expenses should be able to be reasonably estimated by tracking past expenses, reviewing vendor contracts, and accurately projecting growth. Constant justification for variances is required to explain why better and less expensive results cannot be obtained by using fewer resources. To properly prepare a budget, the laboratory manager should be able to respond to the questions on this slide. What are the projected test volumes for the upcoming budget period? How much did the laboratory spend on reagents, consumables, proficiency testing, licensing fees, maintenance contracts, etc. last year? Are there any changes such as changes to the test menu, increased fees, purchase of additional proficiency tests, etc.? Do increased expenditures for the send-out test to the reference laboratory warrant investigation of bringing testing in-house? If any tests are brought in-house, is there an increase in the testing section's budget and a corresponding decrease in the send-out account? When reviewing a budget, it is important not to focus on numbers only, but to understand the objectives of the department and organization behind the numbers. The laboratory manager should be able to objectively assess the needs of the organization, the resources available, and appropriately allocate the resources to accomplish the established goals. Cost accounting identifies, defines, measures, reports, and analyzes the elements of costs associated with providing a unit of output and appropriately assigns and allocates costs to the test. For example, operating costs require daily review, including but not limited to payroll, reagents, and consumable utilization. Types of operating budgets include fixed, flexible, program, appropriation, rolling, incremental, and zero-based budgets. Capital budgeting were previously discussed in Chapter 11 and will not be addressed again in this lecture. If the laboratory is confident that its expenditures won't change during the budget cycle, there will be no new tests brought in and no new equipment purchased, then this type of budget can be used. The flexible budget can be geared to a range of activity, useful if any change in services is anticipated. The flexible budget compares actual results to the new level of activity instead of comparing against the originally budgeted level of activity. A program budget is based on a specific program matrix. Included in this matrix are all proposed services and the resources required. A proposed program can include a set of activities, services, staffing, and equipment related to the program. This type of budget can be used for short-term planning. An appropriation budget is usually found in government organizations that depend on an outside source of funds. During the review process, the outside agency reviews the budget in detail and authorizes specific dollar amounts. If expenses exceed the appropriated amount, the responsible party must obtain the supplemental appropriation from the granting agency. Budget. A continuous budget that is updated periodically in preparation for the next budget cycle. A rolling budget for a 12-month period is reviewed and revised quarterly. This type of budget is used for cash projections and is frequently updated. The advantage of the incremental budget is the minimal time commitment for preparation. The disadvantage is that it assumes all existing operations are essential for business. A zero-based budget helps to determine levels of resource requirements within a service or program and the possible expenditure level within each responsibility center. Each department manager is required to justify the entire unit budget annually as if all of its activities were totally new. It is extremely important to have accurate records of how much cost is incurred for every resource used to produce test results. The budget will be based on various components of costs such as direct, indirect, variable, and fixed. Fixed expenses do not vary with the test volume for a given period, but variable expenses change proportionately with changes in volume of tests performed. Variable costs increase or decrease proportionally as activity changes. It is important that the labor expenses are accurate to estimate the budgetary needs. The success of budget process depends on the items listed in this slide. Income forecasting estimates future revenues and should be used to set goals. The expense budget can also forecast expense categories. For example, a growth in an outreach services area will require a greater commitment to travel, administrative support, and telephone and other expenses. The cash flow projections are just as important for future planning and are based on the accuracy of projected volumes and expenses. Several factors can adversely affect cash flow, including excessive investments or a too high level of debt. All of these components must be interrelated and coordinated for successful budget planning. Many organizations now subscribe to benchmarking services which attempt to compare laboratories similar in size and scope. The 7 tips outlined in this slide should prove useful in preparing a budget. You need to keep Two things in mind. First, there may be many levels of reviews and approvals that will be necessary. And second, the laboratory is not the only department that will be submitting a budget for review. Most organizations will utilize a standardized budgeting approach. Therefore, while another manager may not be familiar with the laboratory, they should still be able to assist you with the budgeting process. Seeking assistance from frontline staff is a good idea for many reasons. Employees develop a better appreciation as they become aware of the expense involved with operating the laboratory. Frontline staff have the best grasp of resources used during the course of laboratory operations. Frontline staff are more apt to know if there is any waste in the process that may be able to be eliminated. And many employees enjoy being a part of the decision-making processes involved in operating the laboratory. As the invoice approval and submission process may be manual, transcription errors may occur resulting in some expenses assigned to the wrong account or sub-account. Some managers, especially new managers, may figure a positive variance is favorable and do not need investigate or explain the variance. This is simply not true. The laboratory manager should investigate and determine a reason for the deviation. Remember, all negative variances need to be justified by documenting the reasons for the deviation from the projected values. For example, the high unemployment rate caused by the current recession, which began in 2008, has caused many Americans to lose their insurance coverage. Consequently, many of these uninsured patients have chosen to delay their elective surgeries and other medical procedures, including laboratory testing. This has resulted in flat or contracted future volume predictions. These increases raise the employee's pay for the year the adjustment is received, as well as all subsequent years. Employees may also receive bonuses based on performance, project completion, or some other goal attainment. These adjustments usually pertain only to the current period in which the bonus is given and do not reoccur. All of these increases need to be factored into the budget process. Documentation should be clear and concise, yet sufficient to properly explain the adjustment. In many instances, the budget review and approval process will require the budget to be scrutinized by senior administration and possibly the hospital's board. External benchmarking is designed to compare productivity between laboratories similar in size, scope, personnel, equipment, etc. Compare the proposed budget to the existing budget and ask yourself the following questions. Does the new budget make sense? Is it consistent with previous budgets? Have you accounted for any significant adjustments? Did you remember everything? Will you be satisfied being held accountable to the figures submitted? Realistic expectations help explain the inevitable variances that may arise. A variance is a sign that control over expenses is needed. A problem can be solved only if it is identified. Budget should be a tool not for blame but for improvement. The explanations that do not identify causes but rather attempt to indicate a trend do not help to identify the cause of the variance. If the laboratory manager is not able to identify a cause, solutions that address the variance cannot be developed and implemented. To avoid losing sight of the reason for budgeting, it is important to remember the advice listed on this slide. Focus decisions toward clear objectives. The budget is a standard. Focus performance against it. Involve the staff by communicating goals and seek input from the staff for cost reductions. Analyze monthly variances and periodically analyze the services of the laboratory for ways to reduce expenses and improve income. Follow these points listed in this slide to help ensure the approval of a budget. How to explain variances? Always go back to the assumption when writing a variance explanation and base it on a comparison. Realize that some variances are expected, like a variance in workload which should correlate with an increase or decrease in test volumes. Identify real problems and recommend solutions, and recognize that the budgeting process is a tool that monitors, and the budget is only a guideline and estimate. Avoid in explaining variances. Don't try to excuse the previous year's excessive variances by referring to a previous period. Confront the problems that exist each year. Don't ask for a budget increase this year based on not being able to meet last year's budget. Try not to use weak assumptions. It leads to an inability to identify or explain problems. In most organizations, proposed budgets are presented to the finance department and/or senior management for approval. Prior to the formal presentation, the manager should follow the advice in this slide. Budgeting is a process in which every manager must become proficient. It is a way to take control of the laboratory environment, master the financial aspects of a department, and solve problems before they become critical. The budget is a tool to reassure, to clarify, to lower risk, to keep on track, and to assist in attaining goals. If properly prepared, a budget can increase revenues, decrease spending, and identify ways to make improvements. Variances need to be identified, investigated, and documented. The goal of the budget is to set standards. Those standards must then be communicated to the staff with a plan of how revenues will be maximized and expenses minimized.